If I look at last year, from November, Bitcoin rallied 62%, ETH 74%, Sol 74%, SUI 235%. The previous year, we had the same factor. All year, we did nothing, exploded at the end of the year. Bitcoin 37%, ETH 40%, Solana 305%, SUI 128%. We're 7th of November. This is where it started last time. Who knows? But, from here, we should be significantly higher. My best guess is we will have full clarity by the end of next week. Now, whether they agree something soon, but the probabilities, the market will start finding traction. And then as it comes, it'll then start accelerating from it.
So you think we're going to hold 100K?
Yeah, and I think we will end the year a lot higher. Don't forget, last year, we didn't start rallying until November 7th. And then we did 64% from then.
The cryptocurrency market is in a deep freeze, with Bitcoin stuck at a major price level. But this stagnation isn't a failure, it's a deliberate structural pause. The system hasn't run out of fuel. Its supply has been temporarily restricted, setting the stage for an imminent surge. At the heart of the slowdown is global liquidity, the invisible force behind nearly 90% of price action. That flow disappeared after a 1-2 punch. The Treasury hoarded massive cash reserves, pulling liquidity from the economy, while the Federal Reserve continued quantitative tightening. The result? A controlled market freeze. Macro expert Raoul sees this moment not as a setback, but as the final pause before a massive rally. He argues that an explosion is inevitable as structural blockages reverse. The Fed is signaling a pivot and balance sheet expansion, while the Treasury will soon deploy hundreds of billions back into the economy. According to Powell, his forecasted period of extreme growth, the banana zone, was delayed, not cancelled. History supports this pattern. Markets often feel broken just before a major surge. With the Fed pivoting and the Treasury preparing to release cash, the question remains, which will ignite the next rally first? The restarting of the money printer or the $250 billion cash flood?
Hey, I am Maria with DailyDoseCrypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at DailyDoseCrypto have partnered with ITrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
People are so impatient. They think banana needs to be immediate. It needs to be in their precise bags. And that's the issue. We're at that point in the cycle where over time, the liquidity has to come to roll the debt. And as that comes, prices go exponential. And it won't be for everything. Obviously, there's too many tokens now. I don't know how many tokens there are. There's like 1 million of the things.
3 trillion, I think, is my rough.
Yeah. So generally speaking, it's going to be, I think the cycle got extended. It got extended because they increased the maturity of the US government debt from 4 years to 5 years, and that pushed the cycle out longer. And so that's why the business cycle has been subdued, like Main Street's not participating, but Wall Street has. And the moment that kind of changes, which all of our forward-looking indicators suggest, feels like bananas should be on the menu. It's a somewhat unusual environment. So the main driver of crypto prices, NASDAQ, everything is global liquidity. It's like the amount of money central banks create in the system, whether it's through the banking system itself or whether it's through other mechanisms like the QE or things like the Treasury General Account. So that is the liquidity. That explains 90% of all Bitcoin's price action, which is fascinating. The outperformance of alts versus Bitcoin is driven by the business cycle, the ISM survey. Once that goes above 50, people have more money. They start speculating, going further out the risk curve. So everything had been following the money, global M2 and global liquidity up until about July. Well, what happened in July was, firstly, the tariff thing started kind of kicking in and people were starting to get confused. But then what really happened is the Treasury began to build the Treasury General Account ahead of a government shutdown. So what that is, when they build it, they're basically not spending money out of their bank account. So it's less money going into the economy. And normally that's offset by what's called the reverse repo market. That had been already drained. So there was no other liquidity to add because they were also doing quantitative tightening, i.e. taking money out of the system as well. So we had this double tightening going on. Okay, that was going to be a short period of time when they rebuilt the TGA and then the government shut down. So now they can't even spend the money that's in there. There's like $1 trillion in the government account and they can't spend it because all the workers have been furloughed. So that means that money doesn't go into the economy. The reverse repo is drained, so there's no other offset. And they had quantitative tightening. So suddenly liquidity starts seizing up in the system and we start getting weird things going on. And so the Fed immediately said, we're going to stop QT. So that was at the margin, we're going to add liquidity. And then they've even recently today saying, you know what, we're going to have to expand the balance sheet to give the banks more reserves. So they're using the banks to increase the liquidity in the system. So now we're stuck still with them having a record amount of money that they need to spend. They need to spend $250 billion in 3 weeks or a month to pay everybody for their back pay. So that's all going to flood back into the system the moment the government reopens. And when it reopens, that's when liquidity comes back. They drain the TGA over time. But now they have a new liquidity measure, which is the ability to increase the balance sheet. And then the multiplier from the banks goes through. You know, it's quite funny because that libertarians say, well, I've not seen any difference with no government. Yeah, you have, because numbers gone down. We've all got poorer because liquidity has been drained out of the system. But they're structurally going to change this next year as well. They're implementing something called the SLR, the Strategic Lending Requirement, which allows them to allow the banks to keep more reserves, which means they'll buy more government bonds and allows them to lend more money. So they're trying to solve this problem over the longer term. So that's another mechanism by which we'll add liquidity next year that we didn't have this year. We really had a broken system this year because we only had the government which draws down its bank account and then builds it back up again. So it keeps going in cycles. We've always noticed this. We're like, why can't we have nice things? When the market gets to the high, it ends up coming back down again. It's because of this mechanism, but that should now be replaced going forwards. Generally speaking, the market will front run this. So we're still trying to decide when the government's going to reopen. My best guess is we will have full clarity by the end of next week. Now, whether they agree something soon, but the probabilities, the market will start finding traction. And then as it comes, it'll then start accelerating from it. We will end the year a lot higher. Don't forget, last year, we didn't start rallying until November 7th. And then we did 64% from then. Once you see that there's only one dominant factor, it actually is easier. You can strip out all of the noise, all the stuff people tell you about, it's tariffs, it's this, it's geopolitics. It's none of it. It's all one factor, 90% of it. Nothing is perfect. There's always wiggles. There's always things that change, like the shutdown is now the longest shutdown ever. You don't expect that. But when it comes, you kind of know what it's about and why it's stalling things. And again, to go back to the hopium zone, which is the most important part for all of us on a Friday, if I look at last year, from November, Bitcoin rallied 62%, ETH 74%, Sol 74%, SUI 235%. The previous year, we had the same factor. All year, we did nothing, exploded at the end of the year. Bitcoin 37%, ETH 40%, Solana 305%, SUI 128%. We're 7th of November. This is where it started last time. Who knows? But, from here, we should be significantly higher.
Powell highlights one key driver of markets: global liquidity. When central banks inject money, through quantitative easing or other means, risk assets like Bitcoin and tech stocks generally rise. When liquidity tightens, they fall. His data shows this relationship accounts for roughly 90% of Bitcoin's price movement. But 2025 has been unusual. Starting in July, Bitcoin and the broader crypto market stalled despite liquidity conditions that normally support higher prices. Pal attributes this to the Treasury General account, which began hoarding cash ahead of a potential government shutdown, effectively pulling liquidity out of the economy. At the same time, the reverse repo facility, which had provided extra liquidity, was drained, while the Fed continued quantitative tightening. The result was a double squeeze: reduced government spending and continued Fed tightening, with no offset to relieve pressure. When the government shutdown hit, over $1 trillion that should have flowed into the economy froze. Workers stayed home, spending slowed, and the liquidity that fuels crypto prices simply vanished.
So the exponential age thesis plays into all of this, right? The answer to this mess of demographics where global growth keeps falling because we've got aging populations, productivity goes down because old people are less productive, and debt growth is the other driver, and we reached that peak 2008. So how are we going to solve this? We're going to solve this by changing that population number by the robots and the AI. So that is coming, but that's only just started. So we've still got this everything code cycle to continue to play out, which is we have to refinance these debts because the debts are too big versus trend rate of GDP growth, i.e. there's not enough taxes to pay for it. So what they do is debase the currency to kind of make it go away. And they're doing that until the robots and the AI kick in. And we've heard that from Scott Bessent, we've heard it from Donald Trump, we've heard it from Elon Musk. It's like productivity has to pick up. And that's what it's going to come from. So that happens. My guess is we start to get a bizarre world where this starts to really affect economics by about 2030, 2032. Suddenly we'll see GDP growth accelerating, but unemployment might rise. We'll see AI agents as better investors than us. What does it mean for financial markets for us? We get to a point that I call the economic singularity, where kind of the whole economic system as we know it breaks, and we have to develop a new one because somehow we need to tax the robots and the AI. How the hell do you do that? You know, people talk about universal basic income, but we need to solve who do we tax? Where do we get that money from? All of these issues. And then how do we deal with the fact, and this is the bigger thing, is people don't really realize is we're arguing over, do we have AGI or not? Artificial generalized intelligence. We currently have AI that is as smart as a PhD in every subject known to humanity. Right, so this is a polymath that's smarter than anybody on Earth. The next phase, because the intelligence of these models keeps like doubling every year, is we go from an IQ of like 150 to an IQ of 300. We have now replaced ourselves with the apex intelligence. The history of humanity, we have always been apex intelligence. And I have a thesis behind all of this that the fundamental purpose of the universe is essentially to convert units of energy into units of intelligence. And that's the whole evolutionary process. And what we've just created is a new superintelligence. And so we're not the apex creatures. So what does that mean for economies? What does it mean for us? What does it mean for our role in it? I'm not a doomer. I don't think this is the end. I think we just do things differently, which is about being human. It's actually not easy to bet on it cleanly outside of NVIDIA, and NVIDIA's dominance, like Bitcoin dominance over time, has to fall. So we need to see other players coming in. So where's the cleanest bet? Crypto's one of them. Why? Because in the interim, we have to debase currency. And also, agents will use crypto rails. So we kind of know where this is going. So that makes it a very easy bet. It's also been the fastest adoption of any technology or financialized technology the world's ever seen, because AI you can't directly invest in so easily. The other thing is I try and think where the world will go. So we can make plenty of money up into that economic singularity, whether it's out of crypto, buying tech stocks, number will go up over time. There will be a period where everything corrects, NASDAQ corrects 30%, but that's kind of noise within the overall trend. But what I'm thinking about is what about the other side of this? What has value? Now, I think crypto still has value in that because of its use cases and how it evolves. Things like digital ID become more important. That uses blockchain rails. But I also think about the value of digital art, because in a world where you're competing in financial markets with AGI, you have no chance. So what assets can you hold? Well, you want scarcity. So can it be a house? Yes, but houses have this demographic issues and other issues. We also have the movement out of cities into places. We have remote work, so we can move globally. But when I look at it, digital art, is if we're going to go from a $4 trillion asset class today in crypto to 100 trillion by, let's say, 2032, that's going to create 97 trillion of wealth. Let's halve that because I'm an idiot. So you still create $46 trillion of wealth. We'll have made it in crypto. So digital assets and digital scarcity is something that we all understand. And the culturally relevant marker stones of that are NFTs. Once you detrend Bitcoin, it's the exact chart, which is why we've had this weird sort of grind higher, but without the real exponential phase, is because the business cycle. And if you just think about it in sensible terms, is if the business cycle picks up, we all have more spending money, and then we invest more, and we buy riskier things.
Raoul Pal isn't worried. He sees this pause as the setup for something massive. The Fed is ending quantitative tightening and planning balance sheet expansion, while the Treasury will soon spend down its cash pile, injecting roughly $250 billion back into the economy. A 2026 banking reform will also boost lending, systematically restoring liquidity and setting the stage for a major market surge. Pal points to history. Previous cycles saw Bitcoin and other crypto stall, then explode once liquidity returned. He believes we're at a similar turning point now. The government shutdown is creating fear, but once resolved, pent-up liquidity will flow, fueling markets that have been coiled under pressure for months. Looking further ahead, Pal sees the exponential age of AI and robotics driving productivity to solve global debt and demographic challenges. Until then, governments will keep printing money, creating ideal conditions for Bitcoin and crypto. The banana zone is coming, just delayed by a temporary liquidity squeeze. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.